Welcome back to the channel, guys. Today is actually November the 6th. It is Sunday morning. Yes, we did have daylight savings time, and I hope everyone got their extra hour of rest. But what I want to talk about today is go into a little bit more about how to locate or find supply and demand zones. Some of you may call levels or call them areas of interest, or however you want to call them. But we are going to talk about those supply and demand zones. How do we go about drawing them, marking them off, and finding them here on the actual charts? And a lot of people ask, can you trade supply and demand zones even off of a higher time frame chart? Yes, you can, but you have to bear in mind that the higher the time frame chart that you actually are trading from, please bear in mind that those pullbacks, okay, those pullbacks will be a lot greater, and so which means that you could possibly incur some type of drawdown before the market actually moves in your direction, whatever the case is. And it's a situation of where to place your stop, because you're going to have to place your stop probably even further back. But it all depends on the person, how you actually trade. What is the actual strategy that you use to trade supply and demand? Because supply and demand is a style of trading. It's not an actual strategy of trading. So you have to understand that as well. So there are different strategies that traders use to trade around supply and demand. So understand that. But the key idea or topic about this video here is pretty much showing you some examples of how to go about locating those areas of supply and demand. Now, some traders trade supply and demand a little differently. Some people just trade based on looking at aggressive areas of buying or selling in the market, meaning that price is making a big push up in the market, a major push up, pullback, and then aggressive buy, a major push up in the market where you may have a lot of green candles coming out of a swing. So that's aggressive buying, and then you'll think aggressive selling on the flip side of that, to where you have a major swing to the downside and lots of red candles moving to the downside pretty quick. So that's aggressive selling. So me, for instance, I like to trade. Yes, I look for aggressive selling, buying and selling areas in the market, whatever the case is. But what I pay close attention to, more so you hear me talk a lot about, is I like to look for supply and demand zones that are coming out of, or supply and demand zones that are created from structure breaks, pretty much, okay? Because for me, I don't know, it's just my style of trading and the strategy I use, trading around supply and demand. I just think that there's just greater probability in those type of trades setups, whatever the case is. I like to see price breaking levels or breaking areas of structures, creating those areas of supply and demand. So we're going to talk about that today because you guys always hear me in the videos talking about structure breaks, or breaks in structures, and then price pulling back to key areas of supply and demand. So I'm going to show you a couple of zones here. We're also going to take a look at some of the areas where there may be aggressive buying or selling, and leaving behind the area of supply and demand. And then you have that gap, what I call a gap fill area, to where that aggressive selling, say for instance, we had a swing to the downside, price pull back, and then price push lower, creating a supply zone, okay? Thus for creating that area of supply, to where you have multiple red candles coming down where there's aggressive selling, and then price doesn't immediately pull back to that area, whatever the case is, or even to that area of resistance. It don't even have to pull back to the area of supply, even if it doesn't pull back to tick to the area of resistance. So you got a gap in between the creation of that swing and the aggressive selling that took place to the downside, and price doesn't pull back to it. So you got a gap, and price is going to want to fill that area, come back to that zone at some point. Because as traders, you have to think about trading is it's a business in the sense that there's inside business that goes on behind closed doors, and you have to understand what's actually going on the part of the banks and institutions, the bigger players at hand that are filling major orders, injecting big money into the market. And we're not talking about a few thousand or a couple $100,000. We're talking about hundreds of millions of dollars or more on a daily basis, whatever the case is. So when you see major power plays in the market like aggressive selling and aggressive buying, you got to think to yourself, who is creating these massive buy zones or sell zones? It's the banks and the institutions. So when they quickly move away from areas, and then they don't come back to them fast enough, creating kind of like a gap in the market out of that aggressive selling, or from that aggressive selling, or from that aggressive buying, leaving those zones, and prices immediately come back to it. You got to think to yourself, what's going to happen here? Price will come back to those areas. They filled some orders, but I can almost guarantee they didn't fill all orders. So they're looking to fill more orders when price gets back to that zone, more likely. And that's where we as retail traders have to think, from the bigger perspective, look at the big picture as a whole, and understand when price gets back to those zones. There's probably a greater possibility, or what I call a higher probability, that if price comes back to an aggressive selling area where there's a gap, then the price is going to actually sell. I mean, it could probably continue. It's going to reject and continue, selling. Now, for how long, you don't know. And the lower the time frame, that sell-off could be when price gets back to the area. It could be short term. It could be just kind of intermediate type entry that you get into, looking for a quick scalp. And that's what I am. I scalp trade. Okay, I'm not a positional swing style traders. Yes, there are people who actually trade off a higher time frame charts, like the hour, the 4 hour, and probably even higher time frames. But individuals who trade like that, you got to also bear in mind too, they have lots of people trade like that because they may have large size accounts. Okay, all right, meaning that they probably have hundreds of thousands of dollars that they're trading from in their account, whatever the case is. Not saying that they're leveraging all that money into the market at one time, but they have the account size to be able to do so. Yes, do I have an account size where I can trade? Yes, I can actually bump up my contract basis, and trade a lot more contracts. But the thing about it is, at the end of the day, is I am satisfied as a trader. I'm not a greedy person in general when it comes to my personality. So you see me always trade with 2, primarily, sometimes 3 contracts, whatever the case is. And probably in the future, down the road, I probably will bump things up a little bit. But I've always been comfortable with trading the lot size that I use. And yes, I trade the ES futures, which is the E-minis. So lots of traders, I recommend that if you're starting off and you have a smaller account, trade the micros to build your account size up, because you don't have to leverage as much, you don't have to risk as much when you're getting into the market. But you got to understand and keep in mind too that the tick value is not as high. You're talking about $1.25 per tick on the MES versus the ES, which is $12.50. And some people love that idea. I like the tick value. I'm gonna go for the full gusto, but in life, we have to take steps, right? In everything we do in life to get to where we want to be. And that is the key. So take the same approach when you're actually trading. Take the baby steps to build your account up, and then start, if you want to leverage more money and trade a different instrument like the ES futures, to where, which is the E-mini S&P 500, to where you can actually make more money or more profit because the tick value is higher, and do so. But just give yourself some time, some growing room, I'd say. Okay, so let's take a look at a few things here. So I want to talk about the supply and demand areas. How do we go about finding them? And like I said, I basically go off my charts, and I like to see structure breaks to identify key areas of supply and demand. More so just price, more so than price, just breaking to the upside, pulling back, and then breaking structure, and then coming. Making structure in a sense is what I call it. But it's basically just price creating. As it's moved to the upside, pulls back, and breaks higher, breaking through an area of resistance. Basically, a break and retest is what I call it. So price breaking and retesting a key area of support or resistance, whatever the case is. And yes, you can have aggressive buying or selling coming out of just a pretty large move to the upside, creating a supply zone, whatever the case is. But for me, I like to see those. I like to look for and identify key zones from the areas of structure breaks. Structure breaks to me are just, I don't know, they're just when I see those type of setups where prices actually broke an area of structure and then create a supply or demand zone, it just, for me, carries higher probability that the prices, once it gets back to those areas, that it's probably going to reject or fail at that area, and I can look for actual trade entry. So anyways, we'll try to identify a few areas here on the chart. So let's take a look. Now, these 2 examples, I'm going to show you one from November, a demand zone from November the 3rd and a supply zone from November the 3rd, and they're probably just within 20 minutes of each other. These setups actually happen. Now, these are all marked off on the 12 range chart, and the reason why I like using, now, one thing keep in mind also, when you are trading, always have a higher time frame that's greater than a 12 range chart. Like for me, I use a 60 range chart. So you may be using, if you're a time-based trader, you may be using a 60-minute chart paired with a 5-minute chart, whatever the case is. And if you don't understand how I use paired charts and how I recommend beginner traders to kind of use it, to use paired charts, and how they actually work using a strategy around supply and demand that I use, how I trade supply and demand, go back and watch the videos, guys. There are tons of videos here on the channel. I'm not going to handpick and pick out which videos to tell you which one to watch. Watch the videos. They're all valuable. They all provide some level of content or different information that will help you help your trading out, okay? Help you better improve as yourself as a trader. So we'll take a look at the first instance. Yes, this is from, again, like I said, November the 3rd. My trading session here. I marked off some zones, and you can go back and probably, I believe I did post a video on November the 3rd, I believe, which was one of my live recorded sessions. But I do have tons of videos here on the channel showing, or where you can watch my live recorded sessions to where I'm actually trading during the session and watch me trade live. All right, so this is a demand zone. And when I was talking about how I look for my demand zones or supply zones is based on structure breaks, okay? So you see price make a low here, and then it pulls back and makes a lower low. So it created this swing right here, okay? And all a structure break basically is price breaking to the upside, breaking through a major area of support or resistance, breaking structure. It broke this area of resistance right here. When price comes back, so when price broke the structure right here, this area of resistance, what did it leave behind? It left behind some small areas of demand behind, okay? Now, again, this is off a 12 range chart, and the reason why I like to use my 12 range chart a lot of times and trade from it in market supply and demand zone is because you get many setups, okay? The higher the time frame, the less likely that you may be able to find a setup, whatever the case is, based on supply and demand. I'm not saying that it won't happen during the day, but the higher the time frame chart that you may be using, if I go from a 12 range chart and start trading directly from say for instance a 60 range chart, and I maybe pair that with the higher time frame, whatever the case is, to kind of give me the bias or direction of the market. So I'm trading off a 60 range chart and higher time frame, marking supply and demand zones and trading from that chart. Well, guess what's going to happen? I may only get one trade set up a day. So that's what I'm talking about. When you scale down, the lower you get to the time frame, or lower that you get in market supply and demand zones off a particular chart, whatever the case is. Now, the 12 range is already a lower time frame. So if you go any lower than that, trying to trade from specifically like how I have the 4 range chart. Now I use the 4 range pair with the 12 range sometimes because it gives me a lot more confluence and confirmation. But the lower the time frame you get, you gotta be very, very mindful and be pay close attention and probably not trade from a too low of a time frame chart, because there's going to be lots of chop, there's going to be lots of micro swings, and the market is not going to probably give you too much when it comes to off a lower time frame. You may get a couple ticks, maybe 2 or 3 ticks, 4 ticks at most, whatever the case is. So it just depends on price action as a whole itself. But I'm comfortable trading with the 12 range chart because I see many setups, and I'm not going to say that I'm trying to look for like 20 setups in a day or 10 setups in a day, whatever the case is. I just specifically take a look at, because most people always ask me this: how many trade setups do you look for a day? Do not worry about how many trade setups someone is actually looking to take a day and think that's how many trade setups or trades that you actually need to take. To me, it's all centered around high probability. If I see price create a setup at an area and create an area of supply in the zone, I'm using my strategy that I use to capitalize and try, if I see failure and rejection, to trade it. So, getting back to what I was talking about here. Right here, this is a demand area right here. Why? Because we have a little aggressive area of buying right here. Once that created, when price pushed out, started making these higher highs and higher lows, it broke structure right here, creating these little areas of demand left behind, okay? When price comes back to this area, I say, okay, 1, we got a structure break. 2, we got aggressive selling here. And then also we have a little gap right here as well, okay? That price created when it had this, made this aggressive selling, okay? So it had green candle, green candle, green candle, 3 aggressive green candles, meaning it was aggressive buying. It also left behind a gap. So when price pushed up, pulled back, and broke higher here, it did not immediately, as soon as it broke higher, meaning made a high here, pulled back, and broke higher, it didn't immediately pull right back to the swing. It had 1 candle, 2 candle, 3 candles up before actually coming back, testing this zone here, okay? So 3 things: we had a structure break, we had a demand area that was created, and a gap in the market too, meaning there was aggressive buying that gapped the market up. And then when it comes back to that, what am I looking for then? Part of the strategy, me trading directly from the 12 range chart, is that I need to see price do what? I need to see price break or have a make a what I call a candle break in a sense. I want to see it break the body of this red candle to the upside, The first candle doesn't do that, but the second candle does. When it does that, I'm looking to take the trade where? To the most recent high, which is right here, okay? Right here. So it does exactly that. You get into the trade here at 20, take it right on up to 25. It did push a little higher, close to almost 27. So you can get 5 points, and that's trading off the 12 range chart, okay? Directly from it. Now that's an area of supply, all right? And I think I may have talked about this before in a past video and showing this setup here, but now I'm going to, excuse me, that was a area of demand. Now let's talk about an area of supply setup, okay? Supply means aggressive selling, demand means aggressive buying. If you do not know what supply and demand zones or what supply and demand means, please, if you're interested in trading supply and demand, do your homework, spend some time watching the videos here on the channel so that you can fully understand the concept of supply and demand. Now, again, once you just understand supply and demand, people use different strategies to trade supply and demand, okay? So my style of trading, my style of trading supply and demand, the strategy I use to trade it may be different than someone else's, okay? But let me get back to this right quick because before we go on to that supply setup, what I want to say here as well is draw on supply and demand levels. Some people and lots of traders, they draw their zones a little different than the way I actually draw it. The way I draw mine is simply this. Now, you get what's called a break and retest pretty much. I'm just going to show you like, let's see, I'm trying to just show you a quick break and retest of prices pushing to the upside here. I don't know, we could use this like, well, no, let's not do that. Let's go back to an area. Basically, a break and retest is a price making a level to the upside and come immediately back to it. But it could be any area. It could be like this price pushing up here, pulling back, breaking higher, and then coming back right here. This is a break and retest, meaning price creating a swing to the upside or structure to the upside, a high, higher, low, breaking higher, breaking through this area of resistance right here, coming immediately right back to it when price pulls back right here. What do you see price do? It comes right back to that area of which was resistance, is now become support. This is not supply, this is not demand, guys. Demand is created back within the lower portion of the swing where the move originated and started from as it was breaking higher to take out structure, okay? Understand the difference. Then supply and demand versus support and resistance. Again, support and resistance is more so break and retest. Push up, pull back, breaks higher, pulls right back to this area here, what I call the neck or the head of a swing. That is an area which was once resistance is now support, okay? So understand there's a major difference there. So how I draw my supply and demand zones is simply like this. Now price comes back, it pulls this little zipper which created a little swing which created an area of demand. I draw my demand zones from the ladder or the most, the deepest red candle, or the candle that is the last red candle within the area of a swing, okay? So we got to push up, pull back, breaks higher. This being here, we don't have many red candles because it's a small little swing, or a small little zipper before it moved to the up to the upside. But the way I do it is I start, I'm going to go ahead and delete this to show you, okay? I simply take a rectangle, I go to the top portion of that red candle, to the bottom portion of that red candle, and because we have a green candle that wicked slightly below that red candle, I include the bottom portion of that green candle up to the upper portion of that red candle, okay? So, like right here, I'm going to show you, this was well, look at this area right here. Where price pushed up here, pulled back, broke higher, leaving behind this area of demand right here. Let's take that off. Well, I'm going to leave it right there, but I'm just going to show you. The ladder or the last red candle to the downside, okay, on the move or pull back right here, the last red candle before price pushes higher. That last red candle from the top portion of that red candle down to the bottom portion is the area of demand, and you take your rectangle and draw it out. But because we have this green candle that wick below this red candle right here, I also include the bottom portion or the wick of that green candle here as well. So the top portion of that red candle to the bottom portion of the wick of that green candle. That's all the area. That is the how I create my demand zone and draw it out. Okay, so I would create it like that and draw it out. Okay, and pull it out. Okay, so that's the demand zone. All right. So again, the last red candle in a swing or pullback. Okay, as its prices continue moving higher, creating a swing like it did here, pushed up, pulled back, broke higher, got a big swing, nice move to the upside here, then it pulls back, okay? But out of this swing to the upside, okay, high, higher low, higher high, there's an area of demand. The top portion of that red candle down to the, because we have a green candle that wick below that red candle, the bottom portion of the wick of that green candle, top into the top portion of that red candle or the wick of that red candle is where I'm drawing my demand zone, okay? All right, so now let's look at the area of supply just as well, okay? I'm gonna show you an example of supply. Again, the way I like to actually identify my areas of supply and demand, I always like to look for a structure break before I mark an area of supply and demand. You know, some people will just, some traders will do this right here. They'll, let's show an example real quick. Like right here, here's an example, okay? Price pushed up here, pull back, and you see all this green, these green candles here. You got 1, 2, 3, 4. Yes, typically speaking, that is a aggressive buying. So aggressive buying will leads to what? An area of demand below, creating this area right here. So when price comes back to this zone right here, price is definitely going, you know, I'm not going to say definitely, I'll take that back. Not say definitely, but more than likely, because one thing that happened here, it was, let's say two things, okay? For example, is when price did break higher, it pulled back, it pushed up, it created this demand area right here, and before pushing higher, which also it created an area of demand, but you have this gap right here. Price did not immediately pull back to the neck of this swing right here, or the head of the swing, so it left a gap or fill area. Okay, so this will be the demand zone. Again, we have this little zipper again. The last red candle to the downside, which will be, there's only one candle here, so the top portion of that candle down to the bottom portion, but because we have a green candle next to it that wicked out, or pretty much wicked out below the red candle right here, I'm going to draw from the bottom portion of that green candle as well to the top portion and draw to the right. Let's kind of fix that a little bit. All right. We'll leave it like that. That's fine. Okay, it's close enough. But we also have this small gap area from the top portion of this red candle right here to a price pull back, not closing the gap right here. So we'll draw it just like this. I'll draw it just like this. See this gap area right here? Price didn't immediately come back to it. So because you have aggressive buying, a small gap where price didn't, when price didn't pull back right here to close the gap in between where it made this high here, back to the previous swing here, okay, the neck of the head of that previous swing, it created a small gap. So if you think about what's going on there, it's just simplistic way of thinking. This push up right here, pull back, with all this aggressive buying, there were orders being filled left and right, okay? Aggressive buying means that the institutions, the banks are trying to quickly fill orders. They more than likely didn't get all the orders filled in a certain period of time. So leaving a gap, and price not returning back to that area. So it's like, okay, well, if this is aggressive buying, creating an area of demand, and price quickly moved away from the swing pretty quick, they may not have filled all the orders. So simply as a trader, we just think, as retail traders, we wait for price to come back to that area, look for the rejection, get the candle break to the upside, and take it back, you know, try to take price back higher, okay? Back to the upside. Now be mindful that you have a little swing right here where price more likely is going to test this area, the top side of it, because there's liquidity resting right there, and it does that. So the break of the candle, my first means or first contract, or you know, if I'm going to completely get out of the trade, it's going to be right here at the backside of this swing right here, because there's liquidity resting right there. So you must always think about like supply and demand this way. Supply is when the market's coming down, you know, creating that aggressive areas of selling. And demand is where the market is shooting up, creating aggressive areas of buying. So that was another area of demand that I want to show you, where there was a gap and also aggressive buying. Okay, now let's shoot back over to that example I was showing you in reference to supply. Okay, now here's a couple things we have. Price is making a move to the downside. So it starts making lower lows and lower highs. It makes a low here, okay, before turning back around, okay. Pushes back up, pulls back, breaks higher. What did it do on the move to the upside where it made a high here, a higher low, and a higher high? It broke structure right here, okay? So once it broke structure, to me, I know there's going to be some area of demand, you know, back, you know, behind price as it's moving up to the upside. You know, demand here, possibly, demand down here, excuse me, possibly as well. But you have to follow price action to see when price gets back to those zones, you know, what's going to happen. But we're interested in looking at this area of supply and the setup that I'm going to show you, okay? So, when price made this run to the upside, it broke structure. But look what happens. It turns back around, starts making lower lows and lower highs, breaking back through this area of support below. So, as I showed you, when price made this low here, this lower high, this low here, and then, excuse me, guys, something got my throat there. And where it started making these higher highs and higher lows back to the upside, breaking structure here, it turns back around and takes out structure here. So it took structure out on the upside, took structure out on the bottom side here, where there was support at. So lower lows, lower highs, it continues pushing lower. So now that it's took out structure right here on the move back to the downside, what do you think the swings moving to the downside have created? Supply. There's going to be areas of supply, okay? And I love this area here for a couple of examples. Excuse me, not examples, but reasons why. Okay? One, there was a break of structure, okay, on the move to the downside, okay? Price broke structure, areas of structure as it was moving lower. Two, what did it also do? It created an area of supply, all right? Think of this, price break structure, there must be an area of supply, okay? Always, price break structure, there must be an area of supply or demand. In this case here, we're talking about supply. So two, it created an area of supply. Three, what is one thing that really stands out to me here is what I've probably told you guys, what I clarify or look at as what's called a untested zone. But an untested zone is really what I'm talking about, a gap area, okay? An area where the market quickly moves away with its aggressive selling or buying. In this case here, supply zone, aggressive selling, price does not immediately come back to it. See, because most times what you're going to find is the market's going to do something like this. As it's moving in a direction, either up or down, because the market's only going to move up or down. It's going to make a swing to the downside and then immediately pull back to the neck or what I call, in this case here, this would probably be the bottom end because it's what was once a support, now is resistance, okay? So it immediately pulls right back. But we do not get the immediate pullback right there. Price just keeps pushing what? Lower and lower and lower. And then it eventually turns around and pulls back to this area here. So let's take this arrow here off, okay? So now what happens as price makes this run to the downside, pushes down, pulls back, and breaks lower, look what it did. Remember what I just showed you in that demand zone example, or that demand example a minute ago? It created a gap area right here, okay? If you notice, this is the supply zone, okay? But price didn't pull back immediately to that supply zone. It kept pushing lower, okay? It pushed down here, made another low. When it finally pulled back, it did not come back up here to this area, or the swing was created, creating an area of a gap. So what that tells me is that there has to be, and more than likely, because price moved so quick away from that zone and it broke structure to the downside, and we got a gap that where price did not retrace or pull back to it, that those were an area where the banks and institutions quickly were trying to fill orders, sell orders to the downside, okay? And because they didn't get price didn't pull back immediately to that area, and it kept flushing to the downside and creating that gap, what probably has happened there is the fact is that once price gets back to it, the bank's gonna say, okay, we've got orders that we weren't able to get filled on the first time around. Let's wait, let's draw price back to that area, get it back to that area, and then try to fill some more orders, okay? And that's what happens. Look at it. Price gets back to the area, it rejects this area of supply right here, wait for the candle break, okay? Once you get the candle break to the downside, go short. Now, I'm not saying that price is going to run all the way back down to the low right here. You have to be able to follow price action, as prices make all these lower lows and lower highs, and then turn around, start making higher highs and higher lows back to the upside as it was retracing back to the zone. You look for a quick area of rejection. I am a scalper. This is not the highest time frame chart. It's a 12 range chart, but I look for many setups, and that's what this 12 range chart will provide me, is many setups because of the fact it is a lower time frame. Now, it's lower than a 60 range chart. It's lower than a 24 range chart. It is the 12 range chart, but it's not my lowest time frame chart, which is my 4 range chart. And I can trade when I see supply and demand setups directly off of the 12 range. I show you what, kind of what to do is look for a candle break, okay? But you got to pay close attention to price actions to notice or see if there's areas, in this case here, of support right below us, okay? And how much room you're going to have to trade from or to get into a trade at, once you're into a trade, what's directly below us, how much area are you going to have to take profit from, okay, in a sense. And so, like I always tell you guys, or say in the videos, you must know where to get in and get out at before you even get to the trade. If there's not much room, then it's not worth it, okay? In this case here, let's say you got in here, this red candle really didn't break right at the bottom right here, or the bottom of this green candle, until it actually broke right here. Once I see the candle here breaking below the full candle, meaning below the wick itself, and it doesn't have to fully close for me, but once I see price, this red candle breaking below even the wick of this green candle, I'm going to go ahead and go short. But I was short earlier because I was aggressive, all right? And I can't tell you, trading is it's a skill set, and you have to understand what's going on in the market. And the reason why I got into my trade the way I did aggressively before the candle break here is because two things. One, I saw where price was this gap right here. So gaps to me, or untested zones, to me mean higher probability of prices going to reject it when it gets back to that area. And I got in once I saw the close of this red candle, not really the full close of the once price closed below the body of it, because I've got like three means of confirmation: a structure break, a supply zone, and a gap there. I mean, it's almost a no-brainer. I just have to determine how much area below or room do I have to actually take profit from, if there's an area of support right below us, okay? Then, also, I noticed on my 4-range chart, sometimes I use the 4-range to kind of give me a little bit more confirmation, which is another, so to me, this is like a fourth means of confirmation. Right here was the supply zone, right, on the 12-range chart, okay? Now I'm just blow it up because we're looking at this, okay? We're looking at this area right here. Now I'm going down to my 4, or minimize that and go down to my 4-range chart. That same area right here is right here on this chart here, okay? So I said, okay, we're in the supply zone. Price had a structure break. It had a gap. There's a gap fill area there. Let's see if we also can get a structure break on the lower time frame now. This is how I use pair of charts, okay? Using pair of charts, 2 charts together. All right, so now I'm going to see if I get a structure break on the 4-range. Price break structure, and it's moving to the downside. Doesn't immediately come back to it, but what does it also do here? It creates a gap, or even on the 4-range. Even on the 4-range. It did not, hold on, let me see. Did it come back immediately to it? Nope. Look at it. It created a little gap even right here. All right. We'll draw this right here. It didn't come back to it. Let's draw it again. Sorry about that, guys. Okay, right here. It did not come back to it. You see that? Right there. Little gap there. But it didn't immediately come back to this area of supply as well, because once you get a structure break even on a lower time frame, then you just as well have to mark your supply zone, which I did right here, okay? Now, and we're going to talk about how to draw the supply zone too, and then the last part of this video, because I know this video is kind of lengthy. But price it had a structure break even on the 4-range chart, okay? Push lower. We had a little gap as well, and a supply zone. Now we just wait for price to come back to that area on the 4-range chart. When it comes back to that area, okay, and we get a candle break even on the 4-range, that gives me 4 means of confirmation in a sense. I can go short, taking it back down to either here, where there's liquidity at, or try to at least track it. My aim is going to be trying to take it back down to this low right here. But I know that we have areas of support right below us, so I'm looking to try to get filled at least at the next area of support below, and aiming for liquidity at the back end of that area of support, okay? Which it does, comes here, and it pushes a little lower. But, like I said, you have the supply zone on the 12-range, break a structure, supply zone, gap fill, price returns back to supply zone, okay? You have a gap right here, all right? And if you want to use, like I said, this is where I show beginner traders, and I explain this in my videos, about using pair charts. You can scale down to your lower time frame chart. If you're using the 12-range, like I said, as your, like an anchor chart or a chart to draw your supply and demand zones from, then go to the 4-range chart. Wait for the same thing, a structure break, which creates an area of supply on the 4-range. We've got a gap here. Wait for price to come back to it. Wait for the break of the candle on the 4-range. Go short. So this all in all the in looking at both of these two charts here, that gave me so much means of confluence, so much means of confirmation to actually go short, and it works out. Okay, and that's all I really have to show you guys in this video. But one thing I do want to show is because your question is probably, well, how did you mark, or how do you go about marking your areas of supply? Okay, so we talked about how to mark the areas of demand. Let's talk about how to mark the areas of supply, and the way to do it is, you know, like how I showed you the last red candle in that as price pushes to the upside and swings back, the last red candle in that swing on that move to the upside from that top portion to the lower portion, it's going to be the opposite on when it comes to supply. The last green candle to the upside, flip it, the last green candle to the upside. So let's just go ahead and delete this, and I'll draw it out for you guys again. Last green candle to the upside. And because we got a red candle kind of close slightly above or push slightly above the green candle, we're marking from that candle down to the bottom portion of that green candle, the last green candle to the upside, which means the wick of that candle, of that green candle, and then draw it out to the right. Okay? So this right here. Okay? Let's try to get it right on point. All right? So because we have this red candle here that kind of slightly push higher than that green candle, I want to draw from the top area of that red candle as well. Include the body of the green candle down to the wick of the green candle, bottom portion of that green candle, draw it to the right-hand side, price pulls back, taps into the zone. Simple as that, all right? And that's all I have to show you guys in this video here. We're talking about how to locate, find the supply and demand zones, how to draw them, what I look for, and how I draw my supply and demand zones is centered around structure breaks. But also, if you're interested in joining our Discord community, let me show you that. All right, so here is the Discord community that we have. We're approaching close to 600 members now. And the Discord community is for future traders. If you're a future trader, you can invite yourself in for free. All you have to do is find the link down in the description portion of this video. Click on the link and invite yourself again for free. All right, we have two channels pretty much set up. We have the general chat, which I'll show you that. That's just for basically if you have any general questions, you want to share information pertaining to the future markets, you can go to the general chat. You can converse with other fellow traders on there. If you have questions about certain things, whatever the case may be pertaining to the future markets, then you can ask them. Someone will have an answer. If I directly do not have the answer, someone else may. Again, because we have a powerhouse of our community here where we have lots of community members, okay? So anything pertaining to in conversation about future markets, you can talk about it on the general chat. The trading channel or trading floor channel or hashtag trading floor is for the actual trading session in itself. So as the market is open Monday through Friday, you know, the New York session is actually open and traders are trading, we come to the trading floor and we talk about or share our ideas, entries, levels, zones, our trade entries and things like that on the trading floor channel, okay? So if you're interested in becoming part of the Discord, all you have to do is, again, find the link down in the description portion of the video. Click on the link and invite yourself in. But that's going to be it, guys. I'm wrapping this video up. Take care and have a great rest of the weekend. See you in. If you are following the channel and you actually are subscribed already and you're on the Discord, I'll see you guys tomorrow, you know, into a new trading week. If you're a first-time viewer, please take the time and go ahead and hit that red button, that subscribe button, and click on the bell next to it. Turn your post notifications on so you never miss one of the uploads here on the channel. And I thank you for joining and becoming a subscriber. Thank you and have a great weekend.